Now, first of all, we should say that based on the decision that the ECB took in December last year, the PEP program, the Pandemic Emergency Purchase Program, will run until the end of March next year. And I think the ECB will not change this. So I think the ECB will have to repeat that commitment and say that it will do everything to make sure that monetary policy support will be with us for a lot longer. It is true that inflation will rise over the next couple of months to 2% or even higher. However, as of early next year, inflation will come down again. We believe that the average inflation rate might only about 1.2% or so next year. It might not be a lot higher in 2023. And that means inflation in the Eurozone is likely to stay quite a bit below the target over the medium term. And that means ongoing monetary policy accommodation is justified.
Reinhard, this crisis has been a little bit different to the previous one where we saw a very quick fiscal response. To what extent is that fiscal spending doing some of the ECB's work for it so we can see that PEP program come to a natural end at some point?
I think overall the overall economic policy reaction has been much better this time around compared with previous crises. That means fiscal policy has played a much bigger role, and I think will continue to play a bigger role than in previous crises. That means monetary policy did not have to do everything on its own. We've seen clear indication that the EU Commission, that the EU more broadly, will take a decision that after suspending the EU fiscal rules in 2020 and 21, it will also suspend the fiscal rules in 2022. That is very helpful. So fiscal support will remain with us. This allows the ECB to scale back its monetary policy stimulus very gently over time. But it does not mean that the ECB can now cut off stimulus almost like a cliff effect.
Let's talk about wildcards then, because it felt as though the central bank must have been looking over its shoulder, wondering when yields would rise rapidly, along with what we saw in the United States. And, the US 10-year yield did escalate very quickly in a short space of time, even though it's cooled off now, taking with it German bonds and tightening financing conditions. How much time does the ECB have until this happens again?
I think this is very difficult to say. The global recovery will continue. So I think everyone, including the ECB, knows that over the medium term, bond yields will continue to rise. But we've also have to say that over the last couple of weeks, the ECB was actually reasonably successful. In other words, in the last meeting on the 11th of March, the ECB promised a significant increase in the asset purchases. They did increase the asset purchase from around 12 billion per week to around 17 billion. This is not, a great deal, a big deal. This is somewhat underwhelming if we look at the magnitude itself, but it has done the trick because while US Treasury yields continue to rise, bond yields have stayed reasonably low. So the ECB didn't actually have to do a lot more. It could, in other words, keep its powder dry. And that means next time we come into a similar situation where bond yields rise again, the ECB still has plenty of dry powder. The envelope of this pandemic emergency purchase program is still very, very significant, almost €1 trillion in there. So that would allow the ECB to intervene quite effectively going forward should yields rise again. The ECB has given a commitment that they want to maintain very favorable financing conditions in the Eurozone over the next couple of months and quarters. And I think the ECB has the power to do that.